Well, here we go, by popular demand, a full breakdown of DraftKings earnings. And I know you guys want to see this video, and I'm dropping it on a Saturday the day I normally have off from making YouTube videos, but I know you guys wanted to see this, and I'm going to go straight off and say that this earnings from DraftKings wasn't only just the best earnings that I've seen from a company I own, it is the best earnings I have seen so far in earnings season. These earnings were absolutely amazing. 10 out of 10, 11 out of 10 earnings. The best earnings I've seen from any company so far in earnings season. And I have to say that even though I've been a shareholder of this company for 2-3 years now, I think I'm going to go as far as saying these are the best earnings I've ever seen DraftKings do. These numbers are amazing. These numbers are amazing because what it did is it showed so much growth, but yet they weren't sacrificing profitability to get the growth. They were driving up the growth from revenue while driving up now the path to profitability. And this earnings report, even though there wasn't that much, it's gone a little bit more quieter now because obviously some of you guys will know, we've held this stock through a lot of pain. We held this stock when everybody was saying it was terrible. When it was down at $10, we were buying in them dips lower and lower and lower. And we saw a lot of rubbish put out about DraftKings. We saw the stuff about, they can't grow without spending, and we've seen that now happen. The growth is still very good. If they sacrifice the revenue growth, then they'll get to profitability. And they've proven a lot of people wrong with different things that have always been put to them, and especially this earnings report, because this earnings report was absolutely fabulous. And it was really hard for me to actually pinpoint any kind of weakness in this report, which is obviously really good. So let's get started. Let's go through some of the numbers here. So non-GAAP EPS, you could have gone and used GAAP EPS, non-GAAP EPS, whichever one you want to use. I went for the non-GAAP EPS. It came in at 0.14. This beat by 0 to 8. Really, really good beat as we saw the profitability start coming up on this company more and more. Revenue growth, 87%. Beat by 112 million. That's absolutely ridiculous. I can't remember exactly the rate that we were expecting. I think it was 67% revenue growth. So the beat was absolutely insane. And it's no small beat. We're not talking about 10, 20 million on the beat here. We're talking 112 million. Absolutely insane. Monthly active users up 44%, which is really good. I thought this would potentially slow down a little bit more, but it still keeps growing. And I remember, some of you guys might remember this, I remember the time when someone, or there was an earnings report and a lot of analysts came out and said, there's weakness in DraftKings, they're not attracting the users anymore. The user growth was really weak. And I remember a time where the stock had dropped, I think it was 20%. It was I think it might be in Q3 of 2021, maybe. I'm not sure exactly, but I remember there was a time where it dropped 20% and people were pointing out going, but the user growth was weak, and it was absolutely crazy. And, obviously still really good user growth going on there. Average revenue per monthly active user was up 33%. I'm still shocked how that keeps increasing, and it increases a lot as well. I was looking at the monthly active user spend, which I can't remember exactly what it was on top of my head now. I think it was $120, $130. I don't know how they keep getting that money to go up and up and up. That's obviously fantastic as well. So we had a beat on the EPS, we had a beat on the revenue, and then we had the triple beat. Obviously really good when we get the triple beat in, and guidance was raised as well. So revenue as well is now going to be expected to be 3.5 billion, and that beat by, that was expected to be 3.27 billion. So they raised that up by quite a bit. I think there still has potential to raise that up. The suggestion that Jason Robbins was saying on the conference call, there was a lot of reference to, and congrats to Jason Robbins for doing such a fantastic job with the company as always, but the suggestion was that the back end of the year is going to be really exciting. There was so much mention about that, which is obviously really good. So if that is going to be even better in the back end of the year, seems like when they were putting the guidance out, they kind of showed a few figures they were using in that guidance. Seems still very conservative, so I think we could actually see that being bumped up maybe once, maybe twice more. We'll see what happens. Depends on Q3, Q4. We could see that bumped up. And obviously, it's very good numbers that are starting to get put in here. This was, I think, probably the best bit for me because it proved a lot of people wrong. Q4, 175 million in EBITDA. And that's the higher guidance, by the way, on the revenue and on the Q4 guidance. But on the higher side, 175 million in EBITDA in Q4. Now, this is the thing. You've got to go back 12 months. 12 months we were expecting to be break even in Q4. but we've had guidance hiked up and hiked up and hiked up that much. We're now sitting on the point of view where in Q4 we could see 175 million in EBITDA. that's really, really impressive amounts of growth. And you start working out what potentially we could see in the longer term. You know, it wouldn't be a surprise to see at least 500 million in EBITDA in 2024. I mean, you're even talking potentially 600, 700 million in EBITDA in 2024, which is actually really exciting that you start seeing now that EBITDA profitability start creeping into the company, and really good amounts as well, that, you know, and turn around so quickly as well, which is absolutely amazing. There was a lot of mention about new states that are going to be potentially coming online. Obviously, that's going to be good growth drivers, you know, for the company going forward. More iGaming states to come. You know, you look at the new states and the growth to be driven forward. You know, there's still, I think it's 44% of the states that DraftKings are in now. You know, we're not even halfway yet. So this growth here is going to be around for a while. So we're only halfway there. And the other thing, you know, imagine when, you know, Texas and Cali come online, that's going to be absolutely massive. iGaming is massively slept on. I think DraftKings is only in 5. I think it's 5 states that are in iGaming. Hardly, like, you know, got past that, hardly scraped the surface at the moment. There's so much potential for the iGaming as well, you know, more and more. And that's going to happen, you know, when there's a lot of these states that go, oh, look at how much we're making from sports betting, we better do iGaming as well. So this is the sleeping driver as well. You know, DraftKings has a good, you know, it's not even at the peak yet. It's not even close to the peak. You know, it's still on the momentum of the growth stage. Like the growth in the next 5-10 years from DraftKings for the new states and the iGaming states, you're talking 5-10 years of maybe not 87% revenue growth, but, you know, 40, 50, 60%. Sales and this was really impressive. Sales and marketing was up 10 million. Only 10 million. Sales and marketing only went up 10 million. And they generated this time round 408 million of revenue. So what happened here is that this is proof. A lot of people always said that DraftKings can only get sales because they're funding that by sales and marketing. Another quarter of that proved wrong. They did 10 million of marketing extra to get an extra 408 million. So this isn't revenue being inflated by marketing costs. The marketing costs are staying exactly the same, and then they're generating 87% more revenue, which is absolutely amazing. G&A, I was really impressed with the cut down on G&A. I've not got the numbers on top of my head. You can go through the report, but I saw the G&A decrease rapidly as well, and obviously that helped with EBITDA as well, which is absolutely amazing. Gross margins improving as well, more and more, which is obviously what I wanted to see. Obviously, the help of that is the more parlay options coming in, and other things they're using at the moment, so that's obviously really good. 1 billion cash they're going to have at the end of the year. I don't think they'll probably burn through that much cash, so I actually expect that we could see DraftKings potentially start hitting, you know, GAAP profitability, and the numbers aren't that far away. You know, with 1 billion in cash, that's a really healthy cash balance. So we'll see what happens there. My only negative of this quarter is the conference call. And it's nothing to do with DraftKings, but the provider they were using for the conference call, it kept going down, and it was a bit stop-starty for a couple of minutes, and obviously something that you want to just get ironed out a little bit. Obviously nothing really to do with DraftKings, but maybe, you know, move to a new provider potentially for the conference call next time. But that was the only negative that I had. You know, you don't want to be keeping analysts hanging on the call for too long, stopping and starting. But the hold increased as well. So we're seeing once again the parlay options, the hold getting better. I've noticed this in the conference calls quite a bit. You know, talking about how the hold rate is getting better and better and better. And I think even in the guidance that they're using for the rest of the year, they said that basically the hold rate is going to stay like somewhere between what it was last year. And I was like, well, last year you didn't have as many, you know, good parlay options, so you'd expect the hold to actually be a little bit higher this year, and that's where you start thinking, well, is the guidance a little bit conservative this year? That's the kind of hints that I was getting from Jason Robbins there. So obviously that would be really good if they can keep improving that, and that's obviously something that you take for granted sometimes. I won't name the company, but there's another company I'm invested in the kind of sports betting area that some of you guys might be able to guess which one I'm on about here. But they talk so much about how poor their hold rate is. So it's something you take for granted that the hold rate keeps improving. And you're like, oh yeah, well it should do. Well, you look at some other companies and they're struggling with that. The sports outcomes were in the favour once again in this quarter, but this seems to be happening more and more with DraftKings. So I don't know, once again, have they kind of got the point of view where, you know, maybe the introduction of AI a little bit more is helping them, or they're just getting more better with all the data they're getting, and they can get more favourable outcomes for themselves, and that's obviously helping as well at the moment. Higher, they did say that about the higher Ohio tax rate. I think they doubled it recently, and that was a little bit of an impact that they had, but still obviously they were able to work around it. I guess that's one of the, probably the only really risks that you talk about with DraftKings, is that, you know, if any of these states kind of go, oh, you know what, let's double our tax on this, and it's like it ends up hurting DraftKings. I guess that's the only big risk that I ever see to DraftKings. But obviously, even with that going up, it obviously wasn't really much of an impact when you look at the numbers that they were doing. On about old states, so Jason Robbins got asked about some of the old states and like how much are they still growing at. Now, he didn't say too much in detail, and an analyst also asked about how many states now contribute profit. He said, oh, we don't want to touch it too much because we're going to do an investor day. I'm sure he said that they were going to do an investor day in Q1. So I was a little bit like, have we got a date for this investor day? And it wasn't on the conference call. But last time they did one, I'm sure they did it by now, last year. So I was a bit like, well, when is the investor day? So I would have loved to get the information from that. But obviously, he said that obviously all the states are still growing rapidly. And obviously, as I showed you guys, I think like 3-4 days ago, there was a tweet that Jason Robbins tweeted, and then he deleted, because obviously I think he was in his quiet period, so he probably shouldn't have tweeted it. But he was on about the old cohorts of states. So the states that are more of the mature ones that came online in like 2018, 2019. And them states are still growing like 80+% revenue growth. And they're supposed to be the mature states. So you imagine, like, we heard about this so often, like New Jersey. You know, New Jersey, I think even last year, that's the oldest state they have. And that's obviously like 6 years old now. And even that's still growing 30%. So, you know, you look at the, 87% revenue growth, it's easy to see that even if they don't have new states come online, the growth is still going to be high on this for many years. You know, you look at the old cohorts, and it's easy to see that if the states, the mature states that are also profitable, are still growing at really rapid rates, then no wonder the company's going to carry on growing at really good rates, even without new states. And that actually, I thought I put a point down here, but I haven't. And the thing is, I was looking at analyst forecasts as well. And next year, analysts at the moment only have like DraftKings to grow. I think it's 21% on revenue next year. It's low 20%, and I looked at that and I was like, I can't believe they think DraftKings is only going to grow like 21% next year. Like, you look at this year, like, it's absolutely insane, and all the other previous years, and you're not even factoring new states, and even the old states are still growing like 80+%. Like, we're going to be talking about DraftKings easy touching 40% next year. I think they'll probably even come in higher than that. But I would even start at 30% low down, and then start working your way up. I can't believe how analysts are still sleeping on this company. Like, they think this company is only going to grow 20% next year. You need to be starting at 30. I think within the first quarter of next year, we're already be on 40, and we could be even talking higher than that, which is absolutely crazy that analysts are still, that far behind on this company. They talked about the Amazon partnership briefly, said that's going really well. They said that they've also added some new features in for this year, but they didn't go into detail about it, keeping it a little bit of a secret. But Thursday Night Football's been a success. Talked about Disney, the name dropped Disney, the name dropped Bob Iger, and obviously they were talking about his comments about how he wants Disney to get more and more into sports betting. So I don't know if there's kind of a hint that there's something going on in the background. Obviously, we know Disney own a stake in DraftKings. Did Disney want to partner closer with DraftKings? I won't blame them. Who would not want to get in this area? Even Amazon. Someone like Amazon that has a partnership with DraftKings, even they've got to be looking at DraftKings going, look at that hot sector over there. We need to have some player in there. Amazon staying at DraftKings, Disney staying. It's really good. DraftKings have the big partnerships with Amazon and Disney, and you look at both Disney and Amazon. You're like, you probably want to get involved in this area. DraftKings, why would you not want to get involved with DraftKings? It, in my opinion, will be the best company in this sector. So that looks really good. At them two partnerships sound really strong, and obviously Jason Robbins saying, look, we're open for conversations, and actually name dropping Bob Iger, like, you know, we know you're interested. So that was obviously really good, something to keep an eye on there. And I guess that ultimately leads me to my last point, which is on the share price, I guess, really, because obviously I made the video yesterday, and obviously, you know, briefly talked about DraftKings, and at that time the stock was up 12% in pre-market. By the end of today, I think it went all the way down to only 2% up. I think it ended up closing at 5% up. Obviously gave back a lot of the gains on the day, and you know what my, I guess only a few people might want to know my thoughts on that kind of situation. And ultimately for me with the share prices, I'm not really bothered. You know, for me, I look at this. This is what I look at, and I always say this all the time. Whenever I look at companies' earnings, I look at this and make my mind up what I think, and then I look at the share price. This is the key thing to me, because as long as the company is doing these numbers, they'll get rewarded. You know, I saw this company do these numbers, and the stock was down at $16 or whatever it was, and then it would get shoved down 20% down to $11, and I was like, it doesn't make sense, you know. And that's why I even through that period of time, I was trying not to get caught up on the share price, because I was looking at those numbers going, someday it's going to get rewarded. Sometimes it will go back. At some point, it's got to go back to a better valuation, because this company's on fire. And even, you know, I don't want to get caught up in the short. You know, I've been through the time where it didn't make sense when the stock was $16 and it dropped 20% off good earnings. So I don't get really too, you know, brought into it. For me, I look at the long-term picture. And if the long-term picture, I look at these numbers and DraftKings keeps doing these numbers, all right, fair enough. Maybe today, this, you know, you look at the stock and it probably should be at 52 highs. You know, if you're beating, you know, your EPS, you're beating revenue, your guidance is getting hiked up, you're a better company than where you were 24 hours ago. You know, 24 hours ago, you were doing lower EPS, lower EBITDA, lower revenue, you know, lower guidance, and then you do this in 24. You probably should be valued higher, and you know, you only get valued 2% higher on a market cap than when you were you know, it is what it is. And I as a long-term investor, don't get suckered into it, because for me, I'm in DraftKings for probably the next at least 5 years. As far as I can see, I'll probably be in DraftKings for the next 10 years, maybe in the next 15 years. It's probably going to be the key point in my portfolio for the next 15 years. Probably the next 1 or 2 decades, DraftKings is probably going to be the biggest part of my portfolio. So for me, I'm not really bothered where it is whether that share price goes in 24 hours. I'm more looking at the long-term picture. And if DraftKings keeps doing this in the next 1, 2, 5, 10 years, it won't really matter to me if DraftKings today was $32 or $31 or $30, because if they do these numbers over a period of 5, 10, 15, 20 years, DraftKings isn't going to be $32, $31, $30. You know, realistically, we'll be talking about DraftKings where it's pushing, you know, a lot higher than that. You know, we'll be talking easily in the next 5, 10, 20 years. It'll be, you know, it'll be at least a free figure stock. You know, we're probably even higher than, you know, $100 to be fair. But that's where my aim really goes to. And as far as I can see, when I look at the industry that we're in, we're still early doors. Like I talk about, you know, we're only, you know, five iGaming states. You're only 40-something% of states in the US. Like we're still early doors. Like the next 5 years is still early doors in this business life cycle. So yeah, it's obviously it's a little bit disappointing to see it come out with these numbers, and it is as much as what it should be. But obviously you got to also take into context that it's been on an absolute fabulous run this year. But at the end of the day, you know, from someone that's been through this stock that has put fantastic earnings and has dropped 20%, I've seen it all. So I'm not really bothered about where the share price is. I just need to know where I'm at, and I'm happy with the investment. And I can tell you today, after looking at these numbers, I think that this is not only the best financially performing stock in my portfolio, it's the best stock I've seen report earnings. And that's all I can ask for if it's my biggest position in my portfolio anyway. So yeah, hope you enjoyed the video. Well done to any of you shareholders at DraftKings. I think you can only be happy after these numbers, after the triple beat anyway. Have a great weekend. Catch you in a bit.